Welcome to the Cyber Risk Management Podcast. Our mission is to help executives thrive as cyber risk managers. Your hosts are Kip Boyle, Virtual Chief Information Security Officer at Cyber Risk Opportunities, and Jake Bernstein, Partner at the law firm of K&L Gates. Visit them at cr-map.com and klgates.com.
So, Kip, what are we going to talk about today on episode 110 of the Cyber Risk Management Podcast?
Hey, Jake. Today we're going to figure out something that a lot of people are struggling with, and that's how do you survive this crazy cyber insurance market? And this is not a topic I would take on by myself, so we have a guest that's going to help us do that. Her name's Jennifer Cohen, and Jennifer is the Cyber and Governance Director inside of the executive liability practice at Hub International, which is one of the world's largest insurance brokerages.
That's great, Kip. Is this a sponsored episode, or is this a guest appearance only? Just to be clear, because we recently did our first sponsored episode, and I like my disclosures and my disclaimers, and I just want to be clear on this.
I'm so glad I have you as a co-host, because you always keep me honest about this stuff. It's not a sponsored episode, so I'm glad you clarified that. But listen, everybody, if we do another sponsored episode, we promise we'll clearly tell you up front, hey, this is a sponsored episode, so that you'll know that we're not going to try to sneak anything by you.
Yeah, it'll be conspicuous too, clear and conspicuous.
Yes, it will
That's the
meet
legal
the
standard.
FTC. Yes, that's right. We're going to practice reasonable marketing.
Okay, so let's meet our guest, Jennifer Cohen. Jennifer, it is great to meet you. Why don't you introduce yourself for our audience?
Hey guys, I'm so happy to be here today. I've actually listened to some of your podcasts, and I love the way that you attack these issues, and you attack them in a way that makes I hate to say the cyber risk as fun as it possibly could be. So I'm delighted to be here with you guys today and talk about the cyber insurance market.
Yeah, it's pretty crazy. We have seen, Kip and I in our practice as kind of, practitioners and cyber risk managers in the real world. There's no question that things have just turned upside down. And I think, Kip and I have really been interacting with the cyber insurance market, almost as long as we've been doing the podcast and working together, maybe even the same amount of time. And, it used to be that if you had a pulse and some dollars, you could get yourself a cyber insurance policy. And you know what? It was pretty darn good cyber insurance policy. Like, didn't cost a whole lot. It gave you a lot of protection, didn't have a high deductible or retention. So things have changed, haven't they?
Yeah, things have changed substantially. And, people don't realize this, but insurance is actually a very innovative industry. So if they see something that they can offer insurance on, they're going to try to formulate a policy around that, right? They're always looking to expand their business, just as anyone else is. So when the rise of the internet and all of our transactions taking place in e-commerce and companies, relying on the internet and on, digital tools more than ever, someone was smart enough to say, hey, we should put some insurance around that because, what could go wrong? Something could go wrong, and we could charge some premium dollars for that. We could create a policy to ensure the risk of something going wrong in the cyberspace. So that's exactly what happened, and they rushed in to fill that space. And now, as you so keenly pointed out, things have changed.
They sure have. And maybe just give us an overview of, how things have changed. And then after that, maybe, why you think things have changed?
Right. So, the market starts out as any market and it grows organically. We sell a bunch of policies. Everybody gets a lot of insurance, but there was no real data. There were no claims. There were no cyber claims for insurance underwriters to look at in order to match rate to risk, right? That's what we talk about in the insurance industry. You have to match the rate to the risk, and hopefully you're right, and you charge enough rate to cover the risk, And then you end up with a little bit of profit at the end of the day. And what happened was initially we didn't have any of that information. Well, now we do. The last 3 years have been really, really tough. And we are currently in what's called a hard market. And a hard market is similar to a seller's market, right? That's another way to think about it. So capacity is low and premiums are high. So you look at the housing market, it's the same thing. The housing market is a hard market. Well, the cyber insurance market is a hard market. And that's because all of these claims have come in. The frequency and the severity of them are there. They're very frequent and they're very severe. I'm sure you guys know about that. And we've had to change underwriting standards. Insureds have to jump through a lot more hoops, fill out a lot of applications, be very transparent about all of their cyber controls. And if the cyber controls aren't adequate for the underwriters to feel good about the risk, they'll simply pass on it because there's 17 other applications behind yours.
Yeah, there's a lot of demand for cyber insurance. So the insurers can afford to be choosy. Now, I wanted to unpack a term that you used, Jennifer, that some people in our audience may not be familiar with. You talked about capacity. Would you like define that term a little bit, make it more understandable?
Sure. Using the housing analogy again, capacity is supply, right? So capacity in the housing market, how many houses are there available for prospective home buyers to obtain? Well, how many cyber insurance policies are available for prospective cyber insurers to obtain?
Okay. And now I've worked in insurance. And so I think what you're saying is the number of policies available. Well, that sort of translates into how much money has the insurance company allocated for writing policies. Is that a fair way of also saying that?
Sure.
Okay.
Sure. How invested do they want to be in this market?
Right.
Okay.
Right.
I think that's the answer that I think is helpful for me, because I'm thinking, houses is like, okay, I get it. Like, it's physical space. There's only so much physical space and there's only so many houses that are available. But, what's the limit? There is clearly a limit on policies that can be written. But
the insurer gets to decide that, right?
Yeah, the insurer
gets
to decide. I like that concept of it. It's capacity is the level of investment that any given insurance company wants to be in a given insurance marketplace. That's really interesting, and I think that's something that we haven't really ever touched on before when talking about insurance. And I think that's because, and not to overly blame the insurance industry itself, but it sure seemed like there was an unlimited capacity at the beginning.
Yeah.
One could not be faulted for having that impression. So it's interesting to kind of see how that itself has changed.
Yeah. And it's interesting that I was just looking at a report the other day from Sequoia about, their investments in new ventures, right, in their capacity as venture capitalists. And they talked about the market getting hard, the cost of capital going up. And so that's another thing that I'm thinking of here as we just sort of introduce this, start to unpack this topic about, what's going on, the idea of a hard market and a limitation of capacity. Okay. So,
just to throw another thing we talk about in terms of capacity, another word we can use is called appetite. And I have conversations with underwriters at carriers all the time. What's your appetite, right? What's your appetite to write this type of risk? Do you want a manufacturing company or a technology company, or will you write a casino, or will you not write a hospital? So we talk a lot about appetite as well.
That's interesting. So, I mean, as consumers, right, we're used to buying automobile insurance. And I don't think the automobile insurance market has ever hardened in my lifetime. So this is really interesting. And I don't think I've ever had the case where buying automobile insurance, somebody said to me, well, I don't really know if I want to insure your Honda.
And I'm not sure that it can. And because there is insurance
highly regulated.
There are pieces of the insurance industry that are highly regulated, and then there are pieces that are not. And I think that when we talk about auto insurance and consumer grade insurance, that tends to be very heavily regulated, whereas, business type insurance, including cyber insurance, is just not as regulated. The regulators say that, at least the theory is that the market will self-regulate in a way. And I think it kind of has in this instance.
I think it's useful to bring this up though, because people listening to this podcast, you think about what experience base do they have in order to understand this issue that we're talking about. And I think most people are just, they're used to buying, consumer facing policies. And it's just such a very different experience than what it's like to purchase a cyber policy. And so I just wanted to just explore that for a moment. But now I want to keep moving here in the episode, because we know the market is now hard. There's restricted capacity, but Jennifer can tell us what's the best way to tackle this issue. So if you want cyber insurance and you're finding it difficult to get, Jennifer, tell us, what should we be doing?
Yes, well, this is how I spend most of my day, talking to organizations about either obtaining cyber insurance for the first time or renewing in this very difficult market. Because as Jake pointed out, super easy to get a cyber policy a few years ago. And then as these claims increased and this market, right? We talk about insurance as markets. This market matured, and we got a lot more data in the form of claims. Underwriters have had to kind of mitigate those losses, because these insurance companies are now paying a lot more claims than they had anticipated. So their profits, their loss ratios, if you will, have declined in this space. So they're hitting people with very, very large premium increases on renewal.
I can't help it, but the absolute nerd in me wants to point out something, or an interesting question about this is that it feels like what happened to the insurance market here is like the quintessential example of like the quantum observer effect. Like by getting into, because here's the thing is like, and obviously Kip wrote a book, Fire Doesn't Innovate. I love the fire analogy, and it's like, when insurance companies write more fire insurance policies, it's not like fire is aware of it and like, oh, I'm going to burn more stuff, right? That doesn't make any sense. But conversely, I think this is undoubtedly the case, when insurance companies started offering cyber insurance, and you see this in the amount of ransom demands, as insurance money became available, the demands went up. So in a very real sense, the insurance market caused its own hardening, right? Would you agree? Would you agree with that?
Yeah, we hate to talk about that.
Well, that's what we love to do on our podcast, right? Make people talk about bad topics.
It's why you never want to tell people to come to your house for dinner what your umbrella policy is, in case they fall down your step, right? You just don't want to.
Actually, no, that's actually a really, really good point, because I didn't think of that, in that you generally don't tell. I mean, in general, imagine if people drove around with like their insurance, their car insurance and injury premium, or like limits, like flashing above their cars. Like, there might be a little bit of like, oh, how can I get that person to hit me? Right. Yeah. I mean, that would be it'd be a little crazy, but like, it's actually a really important point going forward too, I think, because, and this is perhaps very specific to a ransomware market. Like, this is a fairly unique thing. I don't know that historically insurance companies have insured risks that can respond to their own insuring activities, right? I'm thinking back, Lloyd's of London, the oldest, most classic concept of insurance was, transatlantic shipping, when who knows, your ship might just get destroyed in a storm, right? That's why insurance,
or sea monsters,
sea monsters, right? I mean, you're talking, Renaissance era concept, right?
Mm-hmm.
But that was all, if you think about it, it was all all natural kind of disaster-y type risk. Whereas I don't know, it's an interesting question. And I don't want to derail the conversation further, but I don't know how much insurance historically has operated on a adaptive risk.
Yeah, a dynamic risk.
Yeah, that's interesting. And you'll have to have me come back, and then we'll talk about parametric insurance and all of that. But getting back to Kip's question, what do you do?
Now I'm really curious because that.
Okay, coming back for that. I'm making you guys bring me back.
Yeah, parametric. Man, you just got me absolutely hooked. I just got hooked. Like, I have no idea what that could mean, but I am absolutely interested and want to know more.
That's great. So my job here is done. I've got a repeat performance.
That's right.
So what can you do if you need this cyber insurance? Well, the first thing you have to do is you have to take a really good look at your cybersecurity controls, because what underwriters have now decided is, okay, we've seen these claims enough, and we know. Put very simply, we've got to shut as many doors that let the bad guys in, right? So I'm not going to get into a technical discussion here. I can't match wits with Kip on this topic, but all of those things, multi-factor authentication, endpoint detection and response, making sure, just limiting access. So you've got to dig deep into what your cybersecurity strategy is and practice the best cyber hygiene that you can. So prevent the loss. That's what the underwriters want. They want this loss prevented.
Just music to my ears. Music to my ears.
Kip is going to be employed all day long. All day long.
Yeah, and one thing that I think is super important here to point out is that this is an instance where, again, because of the nature of cyber risk, the interests of the insured and the insurer are like 100% aligned. And I think like I kind of view this, and maybe we can talk about this, but I think one of the things that kind of bothered Kip and I initially is that it seemed like you could get insurance no matter what you were doing. And I kind of liken it to, life insurance, right? Like if you want to buy life insurance at any significant premium, somebody comes and like draws your blood and takes your blood pressure and weighs you, and yeah, they like, they want to know your health history.
Yep.
Like this is very rational because you're going to be insuring against a risk. But it just seemed like at the beginning of the cyber insurance market, like nobody cared.
Yeah, it was almost sanctioning disregard for controls. It was almost like saying, don't worry about your controls. If something bad happens, just file a claim and everything's going to be all right. That's definitely the tenor of the, in the beginning.
It was. And I think one of the things that's great about this change is that we both know customers and clients who would say, I could invest, but I'm just going to pay for insurance.
Yeah.
And like, that turned out, that attitude, I don't want to blame the insurance market for everything here. It's not their, I mean, who could, it's only obvious in retrospect in a lot of ways. But like,
it wasn't just coming.
Okay, fine. Kip, you saw it coming.
Well, he wrote the book. Fire doesn't end.
He did write the book.
The same thing happened, right? We see fires. We should insure fires. We're not really sure how fires happen. And then, we do know basically.
We do now.
Happen, right?
Yeah.
But what does it take it takes a minute for the insurance industry to say, okay, hang on. What's going to prevent this claim? Yeah. And the minute they figure out what's going to prevent this claim, then you start underwriting to that.
Yeah. And this was particularly bad because not only were they not realizing what prevents claims, but they were accidentally feeding a beast because every time they paid a ransom, they were actually emboldening the criminals and giving them more fuel to attack us with.
But you know what's great about the insurance market? It is probably one of the most efficient marketplaces that has ever existed. You think about like everything that we've talked about has happened within 5 years. Like it is adaptive. Like
Absolutely.
it moves quick. And
although I have to say that insurance in my worldview I'd seen it as very staid and, not changing very much because now I realize it's because I was working with highly mature products. And here, this is a very immature product, right? And so it has been encouraging to see things change. And now I'm actually telling my colleagues in the cybersecurity career field, I'm like, you need to watch the carriers because they're going to take a national leadership position on what is considered to be good cyber hygiene. And today we look at standards like, payment card industry data security standard or whatever. But I don't think that's what we're going to be looking at in a few years. We're going to be, primarily looking at what the insurance companies are saying really makes a difference. And I love that.
So, which brings us to the actual question. What should companies and potential customers of cyber insurance be doing? And maybe as part of that answer, and you can tell that Kip and I get way too excited about cyber insurance on this podcast.
I love it. I'm the perfect person to, be here with you guys today. I'm an insurance nerd.
And it's really, I have to admit, like, it isn't just on the podcast that we nerd out about cyber insurance and stuff. Like,
Jake,
we actually
don't tell everybody.
I know, but we just always do this. So my added question or my little bonus concept here is, a few years ago, we would say, as a matter of course, cyber insurance is 100% part of someone's cyber risk management program and strategy. Toolkit, right? It's part of the toolkit. And, just to be honest, for some companies that has changed because it's expensive, right? Or you just can't get it. So I'm really curious if you could address that, and I promise I will try not to interrupt for at least 30 seconds.
Okay.
On this question, because I think it's super important.
Absolutely. So, first of all, I think it's important to look at your insurance purchase as an entire purchase. So, cyber insurance is expensive because it's a hard market, but there are other coverages right now that are in a soft market. So, for instance, directors and officers is in a soft market. Look, I know they're very different purchases. Your health insurance for your employees is, 30%. It's a huge number. So your coverages are different. You're trying to assess different risks. But if you can step back as a company and look at your entire insurance purchase, then I think that can soften the blow. So this year, cyber is expensive, but that's not always going to be the case. We're going to figure this out, and the market is going to level out. And I want to draw an interesting intersection between directors and officers. What is happening, and Kip and I have talked about this. Companies are getting sued. Directors and officers are getting sued for poor cyber hygiene. So you get breached. Your customer data gets released. Everybody's privacy, has been impacted. And all of a sudden you have a shareholder litigation suit because there were basic things, just as there are basic things that you can do to your home to fireproof it. There are basic things you can do to your company's security system to protect it. And if you're not doing that these days, you're opening yourself up to an even bigger risk. So, first of all, try to ease the budget in your mind by looking at your entire purchase, because some premiums are going to be higher and some are going to be lower. Secondly, really bring somebody in. If you don't have the best cyber hygiene that you possibly can, you've got to get that nailed down. You've got to protect these risks, because it's not just a question of buying cyber insurance. It's your brand. It's your reputation. No one wants to, get the phone call in the middle of the night or see their, see the headline news the next day about, some huge breach and everybody's data is out there. So that's the other thing. And then I think that we kind of have to wait this market out, and that will happen.
So I want to ask you, I think those are great suggestions. I want to ask you about another thing, which is filling out the applications. Now, what I'm seeing is that the applications are difficult for people to understand. The words are a little vague, and they ask you this question and they give you like a 2-inch open line to write in an answer. And a lot of people are struggling because they're like, we're a big enterprise and the answer to your question is complicated and I have to explain, right? Or or the word is overloaded, right? And in the question being asked, and people are like, well, what do you mean by that? Right? What do you mean? Do I have EDR? Because no, I stopped using EDR. Now I'm using XDR or whatever. So there's a lot of difficulty in navigating the applications. What would you say people should be doing about that?
Yeah, and while you answer that, just maybe remind people of the difference between an insurance brokerage and a broker like yourself versus a carrier, just so people are aware that like there's different functions in the market. And I think I think sometimes we gloss over that, and I just want to make sure that everyone is on the same page.
Right. Thank you. Thank you for that reminder. Right. So I work for an insurance brokerage, Hub International, and we represent the client. So, Kip's company would come to me and say, Jennifer, I need a package of insurance. And I would go out to the insurance companies and secure those coverages. So the broker is the conduit between the client and the insurance companies to secure the various coverages that client needs. And
just like if I was going to buy a house, right? I could go get a real estate broker, right? And they would help me find a house.
Similar, yes.
Okay, similar.
And our interest is always aligned with the client. We're always advocating for the client. But as we're pointing out here, some of these insurance policies are complicated, and they're new, or nobody knows their way around them. And it's our job as the insurance broker to be able to advise and counsel the client about how do you fill out this application? What is the limit that you need? We don't want you buying too little insurance, but we don't want you buying too much insurance. So the broker is really this trusted advisor in the insurance transaction. Does that answer that portion of the question?
It does, yeah. The key there for people to remember is that the broker's loyalty is to their brokerage's clients.
Correct.
Right. And you're not just a tool of the insurance carriers, quite the opposite. I mean, it's all a very interconnected, industry, but
because you could buy insurance from an agent of a carrier, in which case the agent's interests are aligned to the carrier.
And that's what gets confusing, is that typical consumer grade insurance, you tend to just buy it from the carrier. Or through an agent of the carrier. But businesses, particularly larger ones, tend to go through brokerages. And even though this is something that Kip and I have become very used to, it's a good reminder, particularly for cyber risk managers who just may not, they don't live in the insurance world, and they may wonder.
And that's why we're doing this episode, right? To help people get a leg up on something that they may not know much about. They don't do very often, right? And so they're at a bit of a disadvantage. So a broker is a great person to go to because they're going to be on your side. And I think another thing that I would want to be clear on is brokers don't make the rules, right, Jennifer?
Right.
Because I'm going to get mad if the rules are not in my favor, but I shouldn't get mad at Jennifer because she didn't make them.
Well, but we're also very good at helping our clients comply with those rules, having the hard conversations with the insurance companies about why those rules should apply in this particular instance. And just going quickly back to your question about applications, I spend a lot of time going through applications with our clients, explaining exactly what you said. And Jake, as a fellow attorney, I'm a lawyer too. I look at all these questions in two ways. One of which is, let's answer this question. But the other part of it is, what happens if we misinterpret this, we answer it wrong, and a claim is filed, and the carrier comes back and said, oh, you said no when it was yes. And we said, well, your question did say to what extent is yes or to what extent is no. So we have to really work hand in hand with our clients. And oftentimes we add explanations. We add lots of pages of explanations to these applications, and the underwriters appreciate that.
Go ahead, Jake.
That brings up another just clarification point that, again, it's kind of like insurance 101, but I want people to hear it from someone in the industry. Why is it a bad idea to just not be honest on my application? I really need cyber insurance, and we totally use MFA, but
who's going to know?
in reality, like we're in the, like, it's a good, like, I'm not saying like just lie. I say it's like a good faith exaggeration,
Sure.
but maybe explain like, why is that a terrible idea? What happens if you do that and they find out? And I think this is a critical piece to understand because, a lot of the times businesses are used to, like, this happens a lot in the sales process with, like, between businesses where it's like, oh, like the IT wants you to fill out this questionnaire. Can you just do it? Like, and then it goes through, but like an insurance application isn't like that. And maybe just really quickly say,
Mhm.
yes, why we should not do that.
Right. Well, first of all, that's my job to make sure you're not doing that, which is another reason you should use a broker. But and number two, you said good faith. If you complete this application in good faith, then the contract will be construed in your favor as the insured, right? That's insurance law 101. But it's a terrible idea not to answer completely and truthfully, because if a breach happens and you have to file a claim, the insurance company will investigate. They're not just going to cut you a check. They're going to investigate, and they're going to dig deep into your application and into your answers and into the, and make sure that your controls were at the level that you said they were. And you could have a problem in obtaining coverage at that point.
Yeah, and the reason I keep hitting on this is that there's a really interesting kind of phenomenon I've noticed particularly in the tech world. A lot of business decision makers who have come up through a coding background or a programming or a logic-based background tend to forget that people can dig deeper. I see this a lot with clients who are used to kind of solving problems with code and like neat little tricks and things like that. And they get really kind of squirrely about, well, what do you mean a judge can just say that was wrong? Like, they want to know the rules and like the parameters, as if the legal system is this 100%
Is an algorithm that can be deterministic.
Exactly, an algorithm. and I want people to understand that, like, in a certain sense, an insurance company is kind of like that. They have investigators, they have judges, right? And it's going to be the same type of thing. Like, you can't just algorithmically like manipulate the insurance company. Like, it's in their interest to not let you do that. And I think people forget that, like, look, I'll tell you this. When I was at the Attorney General's office, the AG's offices hire a lot of investigators. Well, where do you think most Attorney General government investigators come from? It's an insurance background. They investigate people. They investigate and they will dig deep because they have to.
Right, because most of these insurance companies are owned by shareholders, and the companies have a duty to those shareholders. And if you're not investigating, if you're not being rigorous in your claims processes and you're paying lots of money out, then your shareholders are going to be upset with you. So you're absolutely right, Jake.
Yeah, this is an arm's length business transaction, right? The insurance company does not exist to pay out every claim that is made. Like, that would result in a lack of insurance industry very quickly.
Yeah, exactly. Okay, so I just, as we come to the end of the episode, there's just a couple more things that I would like to touch on.
Yep, it's only been 30 minutes. We clearly have another 15 at least on such an exciting topic.
Listen to me. It's going to take us 15 minutes from the time I say that. So just give me a break here, okay?
True. I just get really excited about insurance for some reason. I don't know. I
noticed. Why. Yes.
Maybe maybe if I get sick of practicing law, I will totally go join Jennifer, and be like, yay, insurance. It's just so interesting.
That's what I did. That's what I did.
See, that's what you did. See, that's what happens.
And that's one of the things I wanted to ask. So
my
Jennifer,
partners are going to kill me now. Hopefully they won't hear this episode.
No, they got to listen to this episode. So Jennifer graduated from law school and now works in insurance. Does your law school, skills and experience, how does it help you, Jennifer, do your work?
Okay, so first of all, I graduated law school 25 years ago, and I did
Okay.
start my career as an insurance regulatory attorney. And
Ah,
so I represented agents and brokers in a variety of transactions. So I even had clients that I was writing policies for. I represented them
mm.
in regulatory matters. Spent a lot of time, Jake will appreciate this, doing 50 state surveys on various,
Oh,
differences in
50-stage
insurance.
surveys.
Just great stuff. And
Oh,
and then I had a lot of other opportunities after that. I was the chief of staff to the state treasurer of North Carolina for a number of years. I was insurance lobbyist for a number of years. But I can tell you that the legal background, working in an insurance brokerage and specifically in cyber insurance, it translates very, very well because the policies are contracts. There are
Mm.
terms that need to be interpreted and negotiated. As we discussed earlier, the applications can be nuanced. You have to constantly look at, what's coming down the bend. And I think that type of consultation and that type of focus that you bring to the table as an attorney is
Mm.
a natural behavior, and it's really helpful to our clients.
Oh, that's
yeah.
great.
This adds to my my argument that lawyers are fundamentally risk managers, which is why I think lawyers can be great at a cybersecurity career. But also clearly, I mean, if insurance isn't, I mean, insurance like is literally risk management. That's what it is,
Yeah.
and so
Yeah.
it's a great fit.
Yeah. Okay. So one other thing I wanted to ask you, Jennifer, when I'm helping my customers fill out their cyber insurance applications, one of the things that I tell them is I said, look, you you don't volunteer so much information. They like to explain stuff, right? They like to like volunteer information constantly. And I'm like, don't do that. This is more like an IRS audit. Just say the least you can say and get out. Right. So stop oversharing up front. And they kind of look at me weird. But I don't know, Jennifer, what do you think? Am I steering them in the right direction when I say that?
So I'm going to give the standard attorney answer, which is it
It
depends,
depends.
or it's
Yes, I'm so excited. I was just waiting. I was like, please say. I was like, please say it depends. Please say it
Yeah,
depends, and I was not disappointed.
it's nuanced, Kip. You are not wrong, but that's not always the best answer. So,
Okay.
and that's again why bringing someone like an insurance broker in, or someone that understands what the carriers are looking for is helpful. So
Mm.
I think there's many times where you say yes or no, you just check the box and move on and wait to see if that, if you get questions back. But if and Kip, you do know this, that underwriters absolutely have to see MFA across an
Hmm.
organization, right? Or zero service accounts. If you know that and that question isn't leading you to the best answer, then you should add to
There you
that.
go. There you go. Yeah. Thank you. Thank you. Yes, that's right. But I do like them to start out with this idea of don't overshare unless you have a reason to share, right? I think maybe that's the modified guidance. One other thing that I wanted to ask you before we wrap up, and that's the federal government's role. What should they be doing? I mean, is there something that we need them to do to help, stabilize this market, make it not so hard? I don't know. I'm wondering, what should government be doing? Maybe they should stay out of it. Maybe they should get in. I don't know. Jake, what do you think?
Oh, I mean, also a former regulator. I think that,
Which is why I asked you.
yeah, I mean, in general, I think lighter touches are better. I mean, think of it this way, right? The insurance market, like I said earlier, is super adaptive. It's very quick. I absolutely 100% without reservation guarantee you that if it was as heavily regulated as other insurance markets are, we would be looking at dysfunction for decades. And
Mm.
that's not, it's just the nature of regulation. It slows things down on purpose.
Sometimes you want
And
that. Sometimes you don't.
sometimes you do want that. Sometimes you want that. Sometimes you want a highly adaptive marketplace.
Hmm.
And so I don't think I think the role for the federal government as it relates to cyber insurance is more going to be setting, and frankly, I think they're doing it to some degree, is setting standards that people should follow for cyber hygiene and cyber best practices. I mean, I have
So the
to
NIST
say,
cybersecurity framework.
yes, the NIST cybersecurity framework, 800, the whole 800 series, CISA, their publications, their alerts, just creating standards that people can align themselves to.
Okay, so they should keep doing what they're doing.
They should keep doing what they're doing, and I think it's critical that that you look at that and say that's probably the best way for the government to help here, rather than coming in and trying to regulate premiums or coverages or things like that. We just don't know enough.
Okay. So the market is so immature that we should let it kind of wring its own problems out at this point. Jennifer, you're nodding your head. So did you want to add anything?
I absolutely agree with the two of you. I think the government's role in this situation would be, simply a public safety role. You look at Log4j, look at SolarWinds, things that if they get into your system, they can move laterally and shut us all down, colonial pipeline type of thing. So setting out standards, right? Making people aware. The Ukraine situation, there were warnings coming out each day, and we were forwarding them to our insureds about, this is what you need to do. If there was a time to start preventing risk, now is the time. So, trying to keep us safe as a country from a huge cyber attack is a great role.
Okay.
Yep.
National defense. And I think the idea of standards is kind of interesting because I agree, Jake, that they should be setting standards. But I actually think they haven't been doing that well enough because the insurance companies are starting to take a more active role in the setting of standards, of actually declaring what really works rather than, here's a bunch of nice to have stuff, or here's a catalog you choose.
But so the issue there is that just comes down to, in general, people suck at risk management, like unless forced, right? And I've been saying this for half a decade, right? Which is like, cyber risk management will improve in direct proportion to liability for failure to manage cyber risk. And one of the things that suppressed that for a while was the overabundance and easy availability of cyber insurance, right?
Okay.
Because you could kick the can down the road. That's what people did. And the insurance industry is like, whoa, hold on now. Like, we don't want to insure your own negligence, right?
Right.
And that's what's changing. And
Okay,
it's good.
So the hardening of the market, one of the things that it's telling us is that the market's maturing. Is that right? Is that fair?
Absolutely.
It's in the process. Yeah.
Absolutely.
Yeah. Okay. So the market's maturing. So that's good. That's good because then we're going to have a more stable market, a more predictable market, where the rules are more clear. People will know what to do. The chaos that we're in right now possibly is a transitory experience, and it's going to shake out at some point. Okay, cool. Well, this is it. This brings us to the end of the episode. So I'm going to ask you, Jake, for final words. I'm going to give our guest the last shot at final words. Anything, Jake, you want to add?
Yeah, I think I want to just finish up by asking Jennifer, as she kind of concludes, to talk about, how should clients, customers, companies be looking at their own cyber risk investment given the change in the insurance market? And I think that's a good way to conclude the episode.
Right. So I would say that very simply, and I'm stealing it from Kip. This is a business risk, not a technology risk. It should be part of your business strategy, and you need to devote time and resources to it.
Great. And get help if you need it, right? Get a broker, get an attorney, get somebody, a virtual chief information security officer, whatever you need. It's like a CFO
Why not
said
all
to me
three,
recently,
Kip?
You could get all three. But it's like a CFO recently said to me, he goes, Kip, I'm so sick of diamonds and carpets. I don't want to do this again. And I said, what in the world are you talking about? And he said, I've had to spend money on diamonds and carpets and I didn't want to get ripped off. So I actually took the time to learn how to buy those things. He goes, I don't want to learn how to buy cyber controls and which ones are good. He says, I just want you to tell me. And I just want to get back to what I'm doing. I just want to get back to my job. And I was like, this is great.
That's interesting.
Happy to help you, right? No diamonds, no carpets. We're good. So
I think that can be said about almost any business insurance transaction. You don't need to be the expert. There are people out there that can be your diamond and your carpet buyer for you.
That's right. Okay. All right. So I'm going to take this opportunity to wrap up this episode of the Cyber Risk Management Podcast.
You better.
Yeah,
or it's never going to end.
This is too much. Today, we figured out how to survive the crazy cyber insurance market and why the market is so crazy. And we did that with our guest, Jennifer Cohen, who's with Hub International, major brokerage who can help you if you need help. But we're going to see you next time.
See you next time.
Thanks for joining us today on the Cyber Risk Management Podcast. If you need to overcome a cybersecurity hurdle that's keeping you from growing your business profitably, then please visit us at cr-map.com. Thanks for tuning in. See you next time.